Hello and welcome to today's demo. My name's Sam and I'm going to be showing you how the Early Pay app works. Today I'm going to take you through how the app looks, how it links into People Planner, and crucially, how the two work together to be fully automated. Let's start in the Early Pay admin console on Workspace. As the admin user for Early Pay, you'll be able to access your company via your Workspace login. Once your company is live with Early Pay, this will populate with data pulled directly from People Planner. That means everything including all your employees, your payrolls, and how much your staff has earned is pulled through automatically. Here you can see that information for our example company, Good Home Care. Your employees are listed here and you can see the payrolls that your company runs. I'll show you more about where that data comes from later. To set up Early Pay, all you're going to need to do is decide the thresholds of money you want to make available to your staff. You can set a percentage of what they've earned, as well as a cash amount threshold too. The system will pick whichever is the lower of the two to ensure you are comfortable with the amount of money you are making available to your staff. Once that's set, all you'll need to do is invite your workers to the Early Pay app, and we're live. The email invitation looks like this. Let's now have a look at how your staff will be able to use the app and access their pay on demand when they need it. First, we need to look at how Early Pay is able to make their accrued pay available to them within the app. To do that, we will need to jump into People Planner. For this demo, let's have a look at our example company, Good Home Care. Let's have a look at how one of their carers might use Early Pay. Our hard-working care worker, Amy, has been busy, and we can see in the timeline section that she has completed a shift that has been confirmed as booked on and off. Here you can see the shift. And we can see that that shift has been booked on and off. So we know that the work has been done. Amy will now need to go ahead and download our phone app from the App Store or Google's version, Google Play. Once she's done that, she will be able to log in with a code that was sent to her in her invitation email. Let's log in now. We're in the app and sure enough, we can see a balance of £127 that's available to Amy. That's 50% of her accrued earnings she's earned from the shift she has just completed. If we click on Why This Amount, we can see a summary of how those earnings are calculated. Amy has decided that she wants to access the full amount available. So let's make that withdrawal now. I'm going to select the amount I want to withdraw, which is the full amount, hit Get Paid Now, and then confirm the withdrawal. I will need to validate that with my fingerprint ID and look. The withdrawal has been made. Once the money has been sent to my bank account, which typically happens within 10 seconds, Amy will receive a notification to her phone to confirm the money's arrived. That money comes from Access, so you don't need to worry about any changes to your cash flow. Amy has been able to access her earned pay when she needs and can access her income to match her requirements. Within the app, Amy is able to track her withdrawals to know when she has been accessing her earned pay. She can see her previous transactions and the pay periods they relate to. Your worker now has control of their pay and the knowledge to manage their finances however they need to. But how will Amy's salary advance affect her next payslip? You've given your staff member access to some of her pay early, so now there needs to be a process to reconcile that accordingly. This is where the integration with People Planner steps in again. We saw Amy make a withdrawal in the app. The key thing is that when that happens, Early Pay sends a message back to People Planner to let it know that this has happened. People Planner will then record that withdrawal and make a deduction that is going to amend Amy's next payslip. Let's look at Amy's pay now in People Planner. Her withdrawals in Early Pay are recorded as ad hoc payments. As you can see, that payment plus the transaction fee are listed as negative amounts here. These payments on a company-wide basis are then collated in your payroll in People Planner under the relevant pay period. Early Pay deductions will sit as negative values in the other column, as you can see. These deductions will auto-update in real time throughout the pay period and then close once that pay period is cut off. At this point, Early Pay deductions will simply be included in your payroll export for you to run your payroll as usual. Think of these deductions just as you would any other deductions like student loan repayments or a cycle to work scheme. You will be able to see these deductions listed on your next payroll export. Very simply, Early Pay will then collect these advances automatically on your company payday via a direct debit repayment. You won't need to do a single thing. Hopefully, this has given you a feel for the automated process that happens to make Early Pay work. On an ongoing basis, the system self-manages through the integration with People Planner, so it won't affect your admin time and won't affect how you run your payroll.